and welcome to another update video on SEI. Some of you have asked for a SEI update, so I thought it's time for an update. I think we covered it for a few days ago for the last time, and the structure hasn't really changed, but we have seen some movement since then, yeah? So the support levels held so far, yeah? The support region here that was communicated was between 26.8 and 31 cents, and again, this is not a target area, it was a support area because the microstructure, to be fair, is not really the cleanest. But I explained or tried to explain that the uptrend can continue as long as we're holding this zone. But we needed to give the market a little bit of space here, depending on, because it wasn't very clear which kind of scenario was playing out. However, the market did touch this support area on Saturday, the 38.2 retracement, and took off already. Again, the nano structure isn't super clean, but again, it was important that support held. The thing is now that we are going higher and that we've reacted to support, we are approaching the next target zone. And I'm not quite sure how this will continue, We need to see how structure evolves. I'm not going to confirm a top until we break support. But yeah, I mean, if we now start to see breaks of support levels, the risk is that either a major top has formed or we're dealing with a B wave pullback. Not very clean. The cleanest pathway for higher prices would be the white count, in which we could form all 5 waves to 60 cents plus, but we'll talk about that a little bit. Let's first see what the last forecast was for SEI. Let's go into our member area, look for SEI, and I know a lot of you are interested in SEI updates. I've been covering it nearly every day, or at least every couple of days or so. So let's say here on the 13th, the idea was that the micro structure does not offer a lot of additional clarity, and that I can offer this micro support as long as the 26.8 cent level holds, the uptrend can continue. So price, oh yeah, that was actually the day where support was tested. Yeah, and we're now, yeah, and then there was an update, earlier today actually, before we saw that breakout, and I highlighted that the 39.9 to 44 cent zone is the next target, and we're now approaching this target area very, very rapidly. So in summary, the price is currently doing what it's supposed to be doing. Again, the structure is not the cleanest. There are many, many options here, but the idea is that we, in the white count, should see a little further upside, because in this white scenario, the price could get to the 138% extension at 44.4 cents, and this would be enough to be considered a larger degree third wave. Let me zoom out a little bit. It's just that the proportions look a little strange, but we can say that in the white scenario, the move up from the April low was a wave 1. This move down was a wave 2. We might now be working on a wave 3. And then there could be a wave 4, but that should be quite substantial, obviously, because the wave 2 also lasted like 1.5 months. And then we can get a 5th wave up to 60 cents. That would give us a larger 5-wave pattern. That is one of the roadmaps I'm tracking. Now, the other one is, and that is absolutely plausible as well, it's that it's just forming an ABC structure. What happens after an ABC structure? Unclear. Yeah, always unclear. So we have to be ready for that scenario with a 3-wave move up. How can we distinguish them? Well, first of all, we need to watch for a price top. I mean, where does the price react? So if the price can really get to the 138% extension, I think the white scenario at least has a chance. If we don't even get to the 138% extension, it's going to get messy, because then the move up is really not high enough to be really clearly considered a third wave. Okay, so that's the first ideal target, ideally even a bit higher. And when we get to the 138% extension, I will add support for this 4th wave. At the moment, this is simply a 3-wave move up, and we can go with a local trend. I mean, I'm going to remove now this micro support zone. We don't need it anymore. So, I mean, again, this move to the upside, it is already a completed C wave. I have 5 waves up, technically complete. So if we now break levels, then, and we haven't even reached the 138% extension, then it would be a signal that a top of sorts has formed, possibly already in yellow wave A. And that B wave pullback could be quite deep. First line of support that I can offer right now is this last swing low. I mean, this is the nearest support level really I can offer. And it is currently defined here at around 31.1 cents. I mean, you might even use that higher low there at 32.9 cents, but you always have to be careful if you set your stop too tight in the crypto sector. And we have a volatile altcoin. I mean, this rally today, like from down here, right, to where we are now. So things can happen very quickly in crypto. It's just if the stop is too tight, you get stopped out easily. So it takes a break below that 31 cent level to indicate a top of sorts. So please be aware of that. Yeah. And the next upside targets are at 39.9 to 44.4 cents. Until here, I mean, the price has now done what it needed to do over the recent weeks. Now I'm at a point where I say, well, it's best to lean back a little bit, let the market do its thing, maybe ride the trend, depending on when you entered, if you entered. Down here was obviously the best setup. That was our 1-2 setup or AB setup. Now we're obviously at a point where there isn't really a clean setup anymore, but I'd still try to help you understand the structure. That's the update for SEI. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, I invite you to join us on X, as of course for free. You can follow us here as well for additional updates, mindset tips, and Elliott wave tips, and just community interaction. So check it out if you're interested. I hope you enjoy it. Thanks so much. Bye bye.